And welcome to Traders Freedom. So we are going to quickly run through a do-over of a video that we've had up online for probably about 4 years, I guess, which is the infamous GameStop crazy run between the end of 2020 and the middle of March 2021, where the stock started about $20 a share and spiked as high as 450 and then dropped all the way back down to about 60 in the span of about 6 weeks. And the amazing thing about that is, A, it happened. But the interesting thing about it is the fact that if you were lucky enough to get in on the last day of trading 2020, how would you have known when to get out? So that rather than starting with your stock at 20 and then getting out of it 2.5 months later or whatever at $50 a share or 40 or 30 or back down to 20, how could you have gotten out of the stock at $450? How could you have gone long the stock when the stock was going up and then go short the stock as the stock was going down? So we're just going to walk through this really simply. So we're going to look at that period from December 31st to October 11th, 2021. You can choose whatever date you want using the calendar widget. So we're going backwards here just in order to make this video. We're going to trade long and short. We're going to start with $10,000 as our initial investment. And back in the day, you would have paid a commission, but we're going to treat it as if it's today, just to give you a look at how no commissions can impact things. And we'll start with a cost of 0. So you fill in these 5 fields, and you press the only button on the screen, the Analyze button, big blue button right under the name of your stock ticker. And in about 5 seconds, we have an answer. So the first thing we're going to see, and I'm just going to roll this up out of the way so we can focus on what we're looking at, the all algorithm summary table. It tells you, okay, of the 16 proprietary freedom algorithms, how many of them were long for the next trading day, how many people were short, how many were out, and then how many models were profitable or unprofitable for that entire period from December 31st to March 11th. So looking at this, you'd be able to say, okay, well, I think my odds were better at making money than losing money, 9 to 7. On this particular day, the day after the 11th, which would be March 12th, the model itself, or the stock itself, had 4 freedom models that were going long, 3 that were short, and 9 were like, just stay on the sidelines, keep your powder dry, we'll come back to it. So you're always going to see results for 16 models. So that's 4, 7, 16. You're always going to see profitability for 16 models, 9 and 7. And this buy and hold is just as a reference point, which is what would have happened if I had just bought that stock and held it through the entire period. And that's a huge number. But again, the point we're going to come back to referring to over and over again is, how would you have known when to cash this out so that you didn't watch that go down, 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 potentially all the way to 0 and below? All right, so this would give us enough information to make us think, okay, this looks like it's a good model. We'll shrink that and we'll go down to the model summary table. And what the model summary table tells you is, for the 16 freedom models, they're created by combining an algorithm with your stock. In this case, it's GME. We're going to have 16 models. The first one at the top is called GME5, followed by GME13, GME1, GME12, GME7, all the way down. Okay? So looking at this, we can see that there's a significant difference in the amount of money model GME5 made. With just 6 trades over that 6-week period of time, it turned a profit of $700 and almost $16,000, starting off with just your $10,000 investment. That's mind-blowing. We can see that it had 3 long trades and it made a ton of money. 3 short trades and made a little bit of money. When you put them together, it gives you a whole lot of money. And then this annualized rate of return, if we were able to do this week after week and month after month, what would our return be for an entire year? Well, the number is just so big, it's hard to believe. But if you did the calculations the way they need to be calculated, that's what you'd see. The important part there is the fact that we're never suggesting that you trade a model for 16 or for 12 months. Simply that if you were comparing models with two different date ranges, like here we've got January, February, and half of March. If we were comparing something with just the month of January and it had a dollar return, it's not fair to look at that compared to what something that traded for 10 weeks did. So in that instance, you'd annualize them both, and then you'd be able to compare the percentages, because it's really not fair to do a dollar for a dollar comparison. That's the only reason we take a look at this column here, just like the only reason we take a look at the buy and hold value here is simply as a point of reference. Okay. So let's say that, so we see there's 8 of them of all, or so 1, 2, 3, 4, 5, have all made more than $50,000. But we need to pick one to drill down a little bit further. So we're going to go to model number 5. And what it does is it then pops up a signal box for the next day across your entire screen. Signal for model GME5 for the next business day, which is 3/12. It's going to be long. It's in the midst of its 6th trade. Again, we've looked at all these numbers, but now what we also see here that's important is what's my current position? I'm long. What's my next day signal? It's long. So what do I need to do the next day? I just have to hold the position. I don't have another trade to make. So I just sit back and see what happens. Now, this is a summary of all of the data that we've looked at for profitability, P&L, number of trades, et cetera, et cetera. When you choose a model, not only does it let you see the all models summary, but the next table you drill down to is the chosen model trade details. So it lets you see this signal box again. So we're just turn it off because we've already seen it. And now we're going to look at the actual trades that GME5 would have made during that period. And we see there's 6 trades. If we go down and we look at the very first one, it made a net trade P&L of about $295. The second trade made a return of about $853. The third one was up about $600. The next one was where it took off. So we had a 3-day trade, a 2-day trade, a 1-day trade, and then it was 14. From 12/1 to 2/2. And it garnered at the end of that period $10,000. Sorry, $64,000 return. The one after that was also 14 days, trade number 5. It garnered a $150,000 return, which is amazing. And then we get to the next one where now we're topping out at $715,000 based on a $125,000 return on that 13-day trade, which it's still in and it's holding that long. You could go back and check each one of these entry and exit dates, 1/4 to 1/7, 1/7 to 1/11, 1/11 to 1/12, all the way up to 3/11. And you could check these prices for GameStop. With Freedom, the way that the execution works is we'll give you a signal by 8 o'clock the night before, which you'll then use to make the trade at the opening price the next day. You don't need to sit there all day and try to find a better price or a magic price. You're just willing to take the opening price and wait for the next signal to follow the next day. But you can go back and use any finance app that you'd like, and you could go up back and see that, okay, but I have bought the stock at the open at $475 on April 4th. You could. You can work your way all the way up these 6 trades if you feel like you want to confirm that's actually a realistic objective. This is incredibly extensive, but for somebody who really wants to get into the data metrics and the quant side of things, we can even roll this guy up and go down and look at its daily model trade details. So same model, GME5, but now we start on your first day, which is way down here at 12:31, and we show you how the prices changed on a daily basis, all the way up to where they finished on 3/11. And it will tell you which trade you were in. So these are all trade number 6 because they're like 14 days long. This is the 13th day of the trade. The date that you got into that trade, the date you got out. Then specific to the date that's at the beginning of each row, we're going to see our entry price, exit price, the number of shares we bought, what its trade P&L was by that specific day, as well as the best price for that day, the worst price for that day. And if we slide it right here a little bit further, we'd be able to see all the columns on the right side as well. About best and worst prices, the daily close, the difference between the close and the open, the difference between the open and the open, and then all of the drawdowns and maximum drawdowns, which is your risk coefficients. We'll go over this in more detail in the proof of concept, but we decided to put this together because we've completely upgraded the system as far as the look and feel of how the application works. So if you look at our original video, it would look like a very old version of an application. It's nothing like it is today. So when you sign up for a free trial for 2 weeks, you'd see something completely different. We didn't want to confuse people. Number two, the amount of data that we capture now is even more so than it was back in 2000 and 2021. The algorithms haven't changed. All of the signals are exactly the same. It's just the metadata that we calculate and store now is far more extensive than it was. And that's simply by a function of how much faster that system servers are on the cloud now, how big a database can be. We still have our 16 quantitative algorithms, but our AI engine, which we were using long before they called it AI, originally it was called machine learning. And it was called, I can't remember the other term for it, but essentially we've been calling it artificial intelligence for ages because it's all of these are based on quantitative algorithms. So you should be able to go back and reproduce this using the new system once you have your trade, once you have your free trial, and run this for yourself. And then you can start running simulations for stocks that you care about and that you want to take a look at. And all of this data is delivered with a click of that single button at the top, the Analyze button. It delivers all your results in about 5 seconds. And when you look at the current position, next day signal, next day action, it's very easy to see what am I supposed to do tomorrow quickly. And you'd know by looking at these and this big green signal bar that, hey, on 3/12, I have nothing to do because I'm already wrong. Amazing numbers, amazing results for an amazing application traders reading. So come back to this YouTube channel early and often. Subscribe if you want to be notified of any new videos that we put up. And if you like what you see and you're impressed and you want to share it with friends and family, please do. Because there's more than enough stocks for everybody on the US markets. We analyze over 11,000 every day. And every night you get a new set of signals for all of those stocks. Besides, that's what friends and family are for, aren't they? All right, that's it. Freedom really is simple.